Thanks for joining in to Cboe Digital TV. I'm John Palmer, president of Cboe Digital, where we talk about all things digital assets. Today I'm joined with Michael Holstein from CoinRoutes. Mike, thanks for joining me today.
Thanks, John. It's good to be here.
Perfect. Well, Michael, could you explain your role at CoinRoutes and then also where CoinRoutes falls into the digital ecosystem?
Sure. We founded CoinRoutes in 2017, really to provide an institutional market access platform, OEMS, we would call it, for the traditional infrastructure players like institutions, hedge funds, service providers, to be able to access all of the crypto exchanges and use algorithms and overlay for optimal best execution.
Great. And when you think about the demand that you're seeing and the regulatory environment, can you talk to me a little bit about how you guys view US versus offshore and what your customers are asking of you and telling you?
Right. Now, it's kind of a trick question because I don't think anybody thinks of themselves as, an offshore company that's here in the US. I mean, people think of themselves as crypto investors or traditional investors or, investors in equities or companies or what have you. So, the fact that investors have to go offshore and use venues like Deribit or Binance or OKEx for liquidity is really just a matter of, I think, a lack of the ability to find the liquidity that they need here because there is regulation and a variety of things that the US schema doesn't allow that they can do overseas, things that you guys are trying to solve, leverage, collateral, physical settlement, things like that.
Perfect. And you touched on one of them, obviously leverage or collateral is definitely a hot topic, I think, across the digital ecosystem today, especially in the wake of the events we've seen over the last, call it 8 or 12 months. What are you hearing from your customers from that perspective? And where do you see the industry needing to solve some of the problems that we're currently experiencing because of those events?
Right. I mean, counterparty risk is like the main thing that we hear people talk about. Where can I execute these assets? And where can I get exposure, to digital assets, whether that's in the format of a future or a perpetual swap or spot or options. Effectively, most hedge funds, if we're talking about that type of clientele, want to have exposure, whether it's short or long. And there needs to be, regulated, fair, orderly markets like we have in other asset classes where there is deep liquidity, where there are good actors, where bad behavior is surveilled and is dealt with, where there's typically membership, where fees are reasonable, and where the overall cost of that transaction is reasonable. And that really is the number one problem that we need to solve right now is, the United States has been the leader of markets for a long time. We have always had, globally, investors come here because we have the most fair and orderly markets. And they're widely regulated, well-regulated pretty much. And we can sit here and complain about regulation and the regulators and over-regulation and under-regulation, all those things. But the bottom line is we're sitting across, from the New York Stock Exchange and, and the NASDAQ and some of, the Cboe. We're here in your headquarters. I don't want to mention, some of your competitors, but we are in the epicenter of some of the greatest financial markets in the world. They're fair. They're orderly. You can transact quickly with liquidity without significant cost. Crypto investors want the exact same thing. And so the fact that they're forced in some ways to go overseas to get liquidity from some of these venues that we mentioned, like a Binance or like a Deribit or like an OKEx or a Huobi, where you don't know what holdings do they have. They're not fully disclosed. You look at like FTX, they weren't properly audited. Like we didn't know, if customer funds were commingled. You had an assumption that, your funds were not being rehypothecated to Alameda Research, for their risky bets and things like that. And in fact, all of that was those assumptions were proven to be wrong. And the fact that there were so many US companies had assets on FTX and were trading there tells you, I think, fundamentally that there is a huge, the appetite for crypto was enough to overcome concerns about counterparty risk and about the lack of transparency and audit and regulation. So why did people go to FTX, right? Why do they go to Binance? Why do they sit on Deribit? Some very basic things. The costs generally are pretty low for transactions, and the liquidity is generally pretty high. Deribit's trading $1 billion notional a day. You can get exposure quickly for $50,000 or $100,000 or whatever you need to, $1 million. You can transact in very small sizes if you're a retail-esque type of a player or an aggregator, and your average size of a trade is $100. You can do a $100 trade. On the CME, the smallest unit size for a futures contract is 5 Bitcoin, which is about $125,000 right now in notional value. That's a block, right? That's a big order. That's constrictive for a lot of participants to have to bite that off. Furthermore, the overall cost of a transaction is relatively low on an exchange, an offshore exchange, if you are using an aggregator like CoinRoutes. I'll do a shameless plug. But that's really sort of our place in the ecosystem, is to ensure you get best execution. Well, what does that mean? Right? Best execution doesn't necessarily have the best PR department, we're fond of saying, but that just means that you're going to be able to trade somewhere close to the touch, even for a block, with fees. And that your slippage shouldn't be great, and it should be measured. And that's one of the things. We measure your slippage relative to the touch with fees. We ensure that typically you've got controls to be able to get pretty close to that. Go slow if you need to perform better. Go fast if you need to get something executed before the market presumably would move, if you have an opinion. And so we specialize in just the ability to provide those levels of controls. But in order to get that execution, you need to have connectivity and membership on a variety of exchanges. Those exchanges can be onshore. They can certainly be with Cboe Digital, and they often are. As you know, we're doing an active integration and certification with you guys, and which we're really excited about. But overall, in order for these markets to have for our markets in the U.S. in crypto, for it to rival what overseas markets offer, regulators need to approve a number of common sense guidances so that there are enough participants that want to participate in this market. We can talk about why investors want to invest in crypto, but we can dispense with that by just saying that there are plenty that do for a variety of reasons. And many of the investors are the type that would be compliant and want to be compliant, right? Many of the investors, as you know, you look at the list of members in your consortium, and they all have, for the most part, many of them have very profitable businesses that are highly regulated here in equity trading and futures and options, and they don't want to put any of that franchise at risk. They have they are regulated, and they have relationships with regulators, which they want to maintain, and they wouldn't want to put themselves or those businesses at odds. You look at T. Rowe Price or Vanguard or any of the traditional money managers in the U.S. And if the regulators are not giving them clear guidance on what they can and can't do and where they can and can't trade, and if they might be subject to a Wells notice, or for example, if they're doing business with a firm that is subject to a Wells notice, that's a problem for them. And that is going to be a blocker for them to enter into these markets. Can you imagine this? You're doing business. You're an American money manager, and you're doing business with Paxos or Kraken. And last week, you had to walk into your boss's office, into the executive committee, and you have to say, "Hey, we're doing business with Paxos. We're buying their stablecoin. We have an issuance product, or we're working with Kraken on this earn product." they both got served a Wells notice. They looks like they're complying. So, I think we're going to be okay here, but I just thought you should know. And then your executive says, I told you, to be more careful and to stay away from that stuff. That's a conversation you don't want to have. And so there are definitely a lot of business leaders that are thinking about not wanting to have that conversation right now. And then that's stymieing innovation and adoption, right?
Do you think, you touched upon definitely recent events, we're seeing enforcement, there's a lot of talk in the industry, regulation by enforcement versus rulemaking, and clearly the SEC and the CFTC and the Hill are, it definitely seems like it's a number one priority to figure this all out. But do you see demand shifting or changing as a result of some of these enforcement actions and cases that are being brought up? Especially at least within the CFTC's jurisdiction. I mean, CFTC isn't short of it either. So out of either of the two?
Yeah, I think we were talking about the Coinbase quarterly earnings report. And I imagine that they probably will benefit from, the Wells notice that was sent to Kraken. I think in terms of, so there are definitely some, local U.S. Crypto companies that will benefit just because of competition. But overall, what we see is that our clients want to trade overwhelmingly outside of the U.S. That's where the demand is. That's where the business is. I met I'm here in New York this week meeting with clients and partnerships. And I sat down with a bunch of prime brokers, crypto prime brokers, yesterday. And one of them said, was saying goodbye because he's moving to London. Another one that I met with was saying goodbye because she's moving to Singapore. And another one had just recently moved to Hong Kong, and but was in town for meetings. And so we were able to meet up. So these are Americans who work for American companies that are moving overseas because that's where the business is, because that's where they're forced to go. And our customers are, one of the services that we provide people. We put people in touch with other people. It's an small ecosystem. We all know each other. I refer a lot of business to attorneys who create offshore entities for clients. There is a distinct advantage if you are a hedge fund to have an offshore entity, right? The fact that you can hedge, right? The hedge and hedge fund, they've got to be able to sell and buy positions long and short and do that with leverage and be capital efficient and be able to settle. And if they're, trading crypto, they need to be able to settle physically. Otherwise, they need to raise cash. And as you know, dollars are in short supply among crypto companies. And the lending environment right now is tough. So it's actually very expensive to borrow cash if you needed to do short-term settlement and things like that. So all these things, if you're trying to play in the US regulatory schema, you are simply at a significant disadvantage to your competitors who have offshore entities and are trading away.
Oh, thanks for that. Yeah, you mentioned something earlier as well that I think everything is a little bit related, it seems like, but BestX, right? And when you think about BestX, especially in our background, we think about the US, we think about equities and equity options and all the rules and all the controls and processes that broker dealers and intermediaries deal with in order to provide a BestX, intermediaries like CoinRoutes. How do you see BestX evolving with crypto? Clearly, we've seen the SEC write some pieces about BestX and how that could play into digital assets in the future. But crypto digital is this inherently global, tradable product. So how do you envision that working, and what's CoinRoutes doing to position itself in that world?
Yeah, the landscape has changed a lot. When we started in 6 years ago, I remember having conversations with people and, significant turnover. We were talking about the advantage of best execution and executing pretty close to the touch and not having slippage, 10 basis, 20, 30 basis points of slippage, we would talk about. And some clients telling me, well, I don't care about slippage because these assets are just going straight up. Or they would say, well, I'm brokering these trades, by voice, and there's a 2% margin, on these things of markup. 2% markup. I mean, these are, for retail, it's egregious, but for institutional trades, it's unheard of. Now I think that we've been brought down to earth with these valuations, and so as a consequence, best execution becomes more and more relevant, right? The less FOMO and the less that the belief that there's a unidirectional motion to the price action, and now folks have a real requirement, oftentimes to fund loans, fund staking trades, to fund their earn and yield programs, and assets have to be bought and sold and have to be lended, and have to be converted between spot and futures and options, and so anytime you're buying and selling, there's going to be significant friction if that trade is going to cost you more than you want it to. Most portfolio models for asset managers have a cost optimization input, and so they look at what's the cost of this trade. What's it going to cost me in terms of slippage, and if it's over a certain threshold, that trade will be excluded, right, from the portfolio trade. So if we can help funds to get inside of those slippage constraints, then they'll be able to trade more. And that's often what we see, is that volumes increase as fees go down.
Yep.
Right? I mean, you just look at our history in equities, what we've talked about, because of the advent of electronic trading, fees have come down orders of magnitude just in the last couple decades. And as a result, volumes have exploded, and volumes are bigger and better than ever, and there are more participants in the market, and retail tends to benefit the most from this. And then, people are able to get in and out of trades quickly and shift things around. And as crypto is looking more and more like the equity landscape, I think, all the time, insofar as there are new and exciting projects that people want to. It's not just about Bitcoin and Ether, anymore, I'll say. There are a lot of exciting projects. There's Cosmos and there's Aptos, and I mean the list goes on and on and on and on. And folks are going to want to rotate, into and out of projects, and the more low cost those transactions are, the better it is for the entire ecosystem, right?
Yeah.
And for brokers that are charging on a commission basis, right? And that's the kind of customers that we support, and the type of model that exchanges have in terms of their revenue model, right?
That's a great point. I mean, if you think about what it costs to do a trade, equities, equity options, today we're probably in the 10th or 100th of a basis point in terms of your notional of the exposure you're getting. But in crypto land, we're still seeing at least 1 basis point, if not 20, 30, 40, 50 basis points, depending on what platform you trade and how you access the platform. So clearly, fantastic point. I think a lot of room for the industry to grow, which is only going to benefit the end customer. Mike, it's been great having you today. So pleasure, and appreciate you joining us today. What's next for CoinRoutes, and what should we be watching for?
We're really excited about a lot of initiatives that we have now. Obviously, the advent of the addition of a variety of derivative products, in addition to spot, and the ability to rotate in and out of positions, dollar neutral, cash neutral, with portfolio trading has been a big push for us in the last year. And so most, if not all, of our clients take advantage of that. And I know that's something that you guys are actively working on, is allowing the collateralization of spot to fund the derivative trades on your exchange, which we're really excited about supporting. We're looking to really democratize this product and bring it to a broader audience. So, we're working hard on the security and the tech stack to have scalability, to be able to on-ramp thousands, tens of thousands of customers onto the CoinRoutes platform, and from either a self-service portal or through intermediary brokerages. So we're just really excited about bringing the advantages of a low cost, low friction, easy to use product to more and more investors.
Great. Well, thanks for that, Mike. Again, it's been a pleasure. Thanks for watching.
Yep. Thank you.